1961, right? So now the Income Tax Act 2025 has already been implemented from 1st April 2026. So it is already 1.5 month that we are watching this, that this has been implemented. So whatever the provisions are there in the new act are now applicable. So that is first thing we should keep in our mind, that it has already been implemented. So, what was the view why this thing had to take place? So, a comprehensive review of the Income Tax Act 1961 was announced. Here, it was mentioned by the learned people that the purpose is to make the act concise, lucid, easy to read and understand. Since they felt that the earlier Income Tax Act 1961 was not that user friendly, the layman could not understand whatever the content in it was. So it was very difficult for any layman person to understand. So every time they had to seek the help of any professional. So that is why there was a need to make it more simplified. Again, it is mentioned that this will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. It will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. So that was the original concept why they thought, and they thought that within 6 months we will be able to finalize everything and all. However, it took very long to have all the provisions and get the consent from the Lok Sabha, Rajya Sabha, and then finally from the president. So, firstly, whenever there is any new act, before that, we have a bill. So, bill is a proposed changes or the complete set in the draft form. So, whatever act you want to be, it is first drafted in the way of a bill. As in when it gets the consent of the president, it becomes the income tax, it becomes the act basically. So uh, just now, as we are again and again discussing the word income tax act, earlier it was income tax bill, since it was in the draft stage. Okay, so basically we are here to understand why there was a need to have a new income tax bill. So firstly, they are saying that income tax act is a dynamic law. Dynamic because every time there is a change in the economy, it has to be updated. Every time there is a new judgment by the courts, then again it has to be, updated. New rules come up, the taxation rates changes and all that. So therefore, and it affects a lot of people, or it affects in fact everyone whosoever is earning will get impacted by income tax act. So this is a very dynamic law, impacting the whole of India. Tax reforms, policy decisions, and ever changing economic environment had made it responsible to have a new act altogether, because there were a lot of reforms, lot of policy changes, and the ever changing environment is there. Since this old act, 1961 act, it was originally framed in 1961 or so. So over the time period, it has been, how many years? Like it has been around 60 years. So during those 60 years, it had become very bulky because lot more provisions through amendments have been added to the main act. So though it started with only 298 sections. Original act was started with 298 sections, but it increased to 819 sections over the period of 60, 70 years. Nearly 4,000 amendments in last more than 60 years have taken place. So since a lot many amendments have been taken place, so it is better to design a new act altogether with, comprising all the changes. So it involved a lot of complexity to understand the provisions which were there. So a simple person could not understand because the language was also not very user friendly. Then there were a lot of provisos and explanations overloaded within the main act. What are these provisos and explanation? Whenever a section is mentioned, the details are given to further elaborate or to explain it better. So explanations are added within the section. And if there is some exception to the main section, then provisos are added. So in the main act, there are a lot of provisos, there are a lot of explanations. So all of them have been removed now to an extent, and a new act altogether has been framed, right? So here we are. So how the whole process was carried out in the drafting stage, then how the government involved the stakeholders engagement to get the feedback and all. Let us just read it from here. So, drafting stage, formation of a core committee. A core committee and subcommittees were formed in August 2024. Around 150 officers were actively involved. More than 60,000 man hours were dedicated to, completely prepare the draft of this income tax bill. Preparation of chapter-wise drafts by subcommittees, review by review committee. So there was a separate committee to draft the whole act. Then there was a review committee also to review chapter-wise whether it has been framed perfectly or not. Examination in Central Board of Direct Taxes and thereafter examination by the Department of Legal Affairs. So again, it was further examined by the higher authorities. Then once they had prepared the draft, then comes the stakeholder engagement. So more than 20,000 online suggestions were received on that bill. Domestically, field level brainstorming sessions were held. At the international level, virtual discussions with the tax departments of various other countries like UK and Australia that had taken place. Drafting guide for simplification of laws of Ministry of Law and Justice was considered. Like now we are seeing that this is how the whole process started, and it involved everyone. A lot of people were involved in the making of this Income Tax Act 2025. Since it impacts a lot of people, the ideas from everyone was taken, and everything was considered while drafting the final thing. So if we see it in a contrast to other countries, how they have complied with their how they have changed their laws there. So if we talk about the UK tax law, they rewrite the whole project, and it took them 14 years to complete that task. If we talk about Australia's tax law improvement project, they took 4 years. However, it is being shown that in India we did it very fast. However, the idea was there since 2004 itself, that they will be coming up with a new direct tax code, but something or the other was stopping them, maybe due to the political reason or some other. It could not be drafted finally, but now we have the actual uh, act which is already been implemented. So this is the milestone of the journey, how the whole thing has taken place. Let us just quickly read it from here. Announcement by the Honorable Finance Minister with respect to the income tax bill. She proposed this income tax bill on 23rd July 2024. Then the Income Tax Bill 2025 was introduced in Lok Sabha on 13th Feb 2025 and referred to the Select Committee on the same day. Then Supreme Court, the Select Committee deliberations were held, including clause by clause. So 36 sittings were there, wherein these Select Committee, which was headed by very renowned people, they discussed every item or every clause in detail. So clause here means what will finally become the section. Next is this select committee presented to Lok Sabha the whole thing on 21st July 2025. However, this original bill was finally withdrawn on 8th August 2025 due to a lot of controversies. Then again, income tax number 2 bill. So again, some changes were made and the whole new draft was put into place in front of the Lok Sabha, and that was done on August 11, 2025. And finally, this bill passed by the parliament and it got presidential assent on 21st August 2025. So it has already been assented by the president on 21st August 2025. However, this has been implemented with the new financial year, that is from 1st April 2026, because some timeline is to be given to the people to get accustomed to the new act. We cannot directly start it from next day. So that is why a lean over period was given, so that the people can get accustomed to it, and then they can even learn the provisions, or they can implement the things in their businesses wherever it was required, right? So what has finally changed, or what has been achieved by this new act? So here, if you see what has changed, if you compare the old act and the new act, if we talk about what is the change in the word limit, in the earlier act there were around 5,12,000 words. However, in the new act, it has been reduced to 2.5 lakhs only. Then if we talk about the tables, how many tables were there? So there were 18 tables. In the new act, we see there are 57 tables. So basically, in the new act, what they have done is they have put the things into paragraphs as well as in the table format also. Because in tabular format, it becomes very easy for us to understand. So they have tried to put in lot of tables wherever required. Next, there were 14 schedules in the old act, while there are 16 schedules in the new act. If we talk about the chapters, there were 47 chapters in the old act, while there are just 23 chapters in the new act. If we talk about the sections, there were 819 sections in the old act, while there are just 536 sections in the new act. Just don't be confused that the sections have reduced. That means there some provisions have been deleted. It is not that. They have been comprised. They have been consolidated at one place. So it is not that everything has been removed, or it is basically the summation of some sections which were scattered here and there. They have put into one place, and maybe one section has been drawn for the complete thing. Next, there were only 6 formulae in the earlier act. Now we have 46 formulae, so that any person can understand how this tax has been calculated, how the penalty has been calculated. So clear formula are being designed in the new act. So anyone can take a look at the formula and can themselves identify what is the calculation for my HRA, what is the calculation for my TDS, what is the calculation for my advanced tax. So all that. So if we talk about the number of forms, so if we all, as we all know, there are a lot of forms which are to be filed. Like while filing the income tax return, you have different forms: ITR 1, 2, 3, 4, 5, like that. Similarly, for TDS, we have different forms. You have Form 16 for your salary purposes and all. So there were around 399 forms in the old act, which has reduced to just 190 forms in the new act. Okay, so that is the major change. It has just reduced to half. So that is what has taken place if we talk about structurally. If the total structure, this is the structure. Now let us check it in reality how it is taking place. So what has been done in the act and rules, and what is not done, or something which has not been touched at all. So what has been done in the act and the rules? So there is a removal of obsolete and redundant provisions. Like in the old act, something which had become obsolete, it was still there in the act. It was not removed from there. It was still there, and only a point was added that from this year onwards, this will not be used. So something like that. So in order to make it more simplified in the new act, those provisions which had become redundant or which had become obsolete have been completely removed. Like in the case of fringe benefits, if you remember, long back, a fringe benefits tax was introduced by the income tax department, and later on, after 2 or 3 years, it was just removed. But it is still lying in the old act. However, if you check the new act, it is not there anymore. Next, the text simplification, avoiding of the complex words. So in the old act, you will find that there are a lot of complex terminologies used, so that it becomes difficult for a normal person to understand. So a lot of simplification has been made with related to the vocabulary which has been used. Next, improve the readability or the structural rationalization. That means a lot of tables and formula have been used so that people can easily understand the basic concept, and they can actually understand the theme behind the whole uh, act. Next, consolidation of provisions for ease of reference. So with respect to NPO, that is non-profit organizations, salary people, TDS provisions, Section 10 exemptions, all those provisions which were lying here and there in the Act, all those have been consolidated and put into one place. That is the major transformation which you will find in the old Act and the new Act. Next, what has not been done? So, what is not done? That is also very important to be checked, because many people have this kind of confusion whether there is any change in the tax rates in the old act, new act, or things like that. So, majorly, there is no change in the tax rate, there is no major tax policy change. So, whatever taxes you were paying in the as per the old act, the same provisions are applicable in the new act as well. The thing is only that if you are choosing the old regime, new regime, the same provisions are continuing here also. There is no disruption. No disruption means whatever has taken place in the new act, if your assessment has been done till that point of time, then nothing will happen in the new act. If your assessments are still open, then the provisions may continue of the old act. That is what is mainly said here. And the topic about this grandfathering clause, we will discuss in detail in the next points. So what is this grandfathering and what do you mean by continuity? So at some places, the old act is still in continuation with respect to having simplification with the new act. Because if you directly jump to the new act, forgetting all the provisions of the old act, it might happen that with the old act, some people were getting benefit. Like you were having some set off or carry forward of losses. So whether that will be allowed to carry forward in the new act or not. So that kind of things will be discussed, and that is allowed to be carried forward for some time period, because government cannot directly say that whatever benefits you have received in the old act will not continue in the new act. This should not happen, and that is why this provisions have been put into place, right? Okay, and in business also, many people get benefit if they are startup businesses and all. So there is some tax holiday provision as per the new act, as per the old act. So the same will continue in the new act also. So that is how the whole act is being designed. What are the instances of improved user experience? So there are elimination of 1200 plus provisos and 900 explanation. So just now we read about what are the provisos. Provisos are basically the exceptions to the main section. So whatever the section is saying, if if you want that section not to apply, then the government put there some provisos. So around 1200 provisos were there in the old act, which have now been nested or consolidated at one place or either removed. Whatever was not required is completely eliminated. And similarly, 900 explanations have also been eliminated. That is what is said here. So section 10 and 90 explanations and 131 provisos were there. Section 1023C had 35 provisos. The third proviso has 4 explanations and second explanation contained 8 provisos. So for each section, subsection, we had a lot of provisos and a lot of explanations. So all that has been now, eliminated altogether. And the section itself has been redrafted in such a manner that you can easily read it and understand it. Okay, let's move further. So nearly 250 sections have been removed, or they have made consolidated. If they are not relevant at all, they have been removed, and if at all some relevance is there, they are being consolidated if they were scattered here and there. So like fringe benefit tax, section 10A provision, section 1033, so which were not required, they have been removed. Next, linear section numbering from 1 to 536. So what do you mean by this linear section numbering? Normally the act starts with section number 1, and uh, moving further, it has a lot many sections. So from 1 to 536, we have continuous numbering of the sections. So 1, 2, 3, 4, 5, 6, we have sections like that. However, in the old act, whenever there was a new amendment, this new sections were inserted in between. So we had after section 80, we had 80A, B, C, D, E, like that. And then in C itself, we had double C, A, B, D. So like that. So again, in section 234, we had 234A, 234B, 234C. And in section 10 also, we had a lot of things like that. So there were, though it looked like the section numbers are just 1 2 3 4, but between that there were A, B, C, D, and it was making the things very complicated. So now what they have done is they have simplified it to look like that the sections are in numbers only, and there is no capital A, B, C, or like that, right? Next. So the language has been simplified. The words like notwithstanding has been changed to irrespective of, and the words like in respect of has been changed to for. These are relevant when you study the act. So when you are studying the provisions line by line, then you have to understand the meaning of these terms, and therefore they have been made some simplified to understand, to make it understand better. Next, clean drafting with better clause structuring. So the drafting altogether has cleaner, or it has become cleaner. Uh, it is not the provisions which have been changed. It is just that the provisions have been listed now in a easy manner, in a better manner to understand. So a clean drafting is now there with the new act. So, what are the basic changes if we talk about what are the big changes if we talk about in the Act? Let us just quickly see that. There is a new concept of tax year. In the old Act, we had assessment year, previous year, financial year. These were the terms used in the old Act. So, every time there was a confusion, like suppose if we talk about whatever earnings are done in the year 2025 to 26, we are filing the return for the assessment year 26-27, saying that our previous year is 25-26, and whatever we have earned in previous year, that will be taxed as per the assessment year provisions. So there was a lot of confusion. What is this previous year? What is assessment year? What is financial year? So all those words have been removed now. Now only single concept of tax year has been introduced. So concept of previous year has been replaced. Term of assessment year is also discontinued. Now we will use just one term, that is tax year. So if you are earning in 2026-27, you will pay the tax for this year only. So this is known as tax year. Whatever the year you are earning, you will pay the tax for that year only, and that is simply known as tax year. So tax year can be less than a complete year also, because someone, if a person has started a business, say on 1st November 2026, suppose he starts a business at that point of time, you cannot say that the complete year will be his tax year, because he did not start from the 1st April. He started from 1st November. So his year will be shorter than 12 months. So his year will start from 1st November 2026 and end on 31st March 2027. For all other cases, the tax year shall mean a period of 12 years, which starts from 1st April 2026 ending to 31st March 27. So that is one complete tax year, right? Let's move further. So this is just the explanation. What is the meaning of tax year? So there is a question here which might come to your mind. Is there a need to change the accounting periods of businesses due to the introduction of tax year concept? If suppose I am a businessman, do I have to make any changes in my books of accounts because this year concept has changed? So the income tax department has clarified here that no, since the tax year is aligned with your financial year, there is no change in accounting year, or the financial statements are not even required to change it in any fashion. So whatever financial year you are taking, that financial year is same, it will be same called as tax year in the income tax. So there is no change as such for the businessman to change or to make any change in their books of accounts. So nothing to be worried about. Accounts will continue the way they were, okay, or the way they are being maintained. Let's move further. So let us see this thing here. If your period of income is from 1st April 2025 and ending till 31st March 2026, what shall be the governing act? So governing act will be 1961. And here we will say that we will be filing the return as per assessment year 2026-27, because the Income Tax Act 2025 has not been implemented for that particular year. So for the earlier year, you will still follow the assessment year concept. However, if we talk about from the year 1st April 2026 ending till 31st March 2027, we will say that the governing act now will be Income Tax Act 2025, and we will now onwards call tax year 2026, 27, 2027, 28, and so on. So there will not be any concept of assessment year, previous year, etc. now onwards. Okay. So also some people are confused whether there will be any missing year. So there will not be any missing year. It is in continuation only. So it is just that the terminologies have changed. Nothing else has changed here. So this is what we have already understood. When the new act will come up, or till when the old act is still into picture. So if you are talking about filing return for this year, if you are now filing the return for this year, so you are still following the old act. You are still filing the returns as per the old act. But for the next year onwards, you will file the return as per the new Income Tax Act, right? So for this year, whenever you are filing the return, you are still filing as per the new income tax. You are still filing as per the old Income Tax Act, right? Okay. Next, big changes: removal of provisos and explanation. This I think we have easily understood how many provisos and explanations have been removed. So I will just show this table here. It simply says that in the old act, around 47 chapters were there, which have now been reduced to 23 chapters only in the new act. Sections also, we have already discussed that there were around 819 sections in the old act, and in the new act, we just have 536 sections. The word limit has also drastically reduced to just half. If we talk about the provisos and explanations, they have been removed completely. So around 1200 provisos have been removed, and around 900 explanations have been removed. Next, what is the procedural provision shifted to rules? So it is like whenever you have to study the Income Tax Act, you also have to study the rules along with that. So Income Tax Act and income tax rules have to be followed. So wherever in the main act there was some procedure mentioned, it has now been shifted to the rules. And it is better to put it in the rules also, because the procedural part should not be there in the main act. So it is mentioned here that relatively minor procedural provisions have been shifted to the rules to ensure that the Act remains focused on substantive law. Procedural matters which do not warrant the rigidity on parliamentary amendments are better suited to subordinate legislation, where they can be updated more flexibly and efficiently in response to evolving circumstances. So this has happened. Next, the use of tables and formula. We have already studied that a lot of tables have been introduced, a lot of formula has been introduced to make the things more simple and easy to understand. Next is the replacement of legal jargons. So wherever legal terminologies were used, like notwithstanding or irrespective of, they have been removed, and simple terms have been used instead of these heavy terms. Next, if we talk about the referencing method, you sometimes references were mentioned in the section. Like when you are reading one section, it will say that you have to first check the other section, what was the provision in the other section, and then you apply this section. So sometimes the referencing was there. So the Income Tax Act 1961 uses references like subclause 2 of clause B of subsection 1 of section 133. So by the time you read the exact wordings, you forget what was there in that particular thing or what. So this has now been simplified to section 133 1B1, so, 1B2, so that it becomes more easy to understand what this is talking about. And it is making much more sense also. And it becomes easy and direct readable. Okay. So it is just a way how you read the act. So it has been made easier for the people who will be finally reading the act now. How are the existing rights and liabilities protected? This is a question which may come to your mind. What about the rights of the taxpayers? How will their rights be protected? So all the existing rights and liabilities are fully protected under the repels and savings provisions of Section 536 of the 2025 Act. This is the last section of this Act. The Income Tax Act 2025 has 536 section, and the last section, that is 536, it talks about the repels and savings. It says that the old act has repelled, but it still saves, or it still safeguard the interest of the taxpayer in following ways. So various things are mentioned there. Additionally, section 535 provides a mechanism for the removal of difficulties, enabling the issuance of directions for smooth implementation of the new act. If we talk about the next question, have any section numbers changed in the Income Tax Act? Yes, it is altogether, shift from one act to the another, and a lot of sections have been changed. So by the time, if you talk about see, suppose if you talk about section 45, which is related to capital gain, or if you talk about some other section which is related to suppose I talk about 194J, which is related to TDS on profession. 194C, it is related to TDS on contractors and so on. So all those section numbers have changed in the new act. So now you have to be accustomed with the new numbering as per the new act. So that is what it is mentioned. Yes, the 1961 Act included several series of sections. For example, section 115A to 115WM comprising over 100 sections. So even though the number is the section number says it is 115, but within 115 section there were 100 of sections. So that is what it is saying. So all of them have been removed, or wherever required they have been consolidated, or a new section number has been introduced for that. So this led to a complex and sometimes confusing section numbering system. So in contrast, in the new act, what they have done is they have simplified it altogether, and they have adopted a more straightforward approach by using standalone section numbers. Standalone basically means they are not using A, B, C, and all. Now they are simply using numbers 1, 2, 3, 4, 5, 6, and line wise it is going. Each of the 536 sections has a unique independent number, eliminating the need for extended series and enhancing clarity and ease of reference. Moving further, so this is a major change. So for professionals, now they have to learn the new numbering as per the new act. So till now we were accustomed with the old act. We had everything on tips, whatever sections you ask we could reply for that, but now the provisions are still the same, but the numbers have changed. So again, with respect to numbers, form numbers, section numbers, we have to check the new act. Next, if we talk about this first part, what is the effective date of the Income Tax Act 2025? This has already been implemented. The new Income Tax 2025 will be applicable from the tax year 26-27. That means from 1st April 2026, ending till 31st March 2027. That will be the first tax year for which this Income Tax Act will be applicable. So let us congratulate each one of us that we are here now seeing the new Income Tax Act. We are now witnessing the very drastic change in the income tax, and we are witnessing the first tax year in our life. Next, because we will be seeing all these years, previous year, financial year, assessment year, we have seen that, and again we are seeing this tax year also. Our next generations, maybe they will just see the tax year, they will not ever see this assessment year or previous year concepts. Is mapping of old and new sections available? Because this is the main question which is bothering many professionals, because it is very difficult to unlearn whatever you have already learned, and then you have to remember or memorize the new sections again as per the new act. So is there any kind of mapping which is available? Like in the old act, section 16 was there. What is this number has changed, what it has changed to in the new act? So can we map it in from old act to new act where it is now located? So it is mentioned here by the department that yes, a reference table mapping the provisions of the Income Tax Act 1961 with the corresponding provisions in the Income Tax Act 2025 has been made available on the official website, that is incometaxindia.gov.in. So whosoever wants to understand how the structure has been redrafted, suppose you remember any of the sections, then you just put that section number and it will reflect what is the change in the new act, what is the new section number, what is the new rule for that, and everything. This table is intended to assist taxpayers, professionals, and administrators in identifying the equivalent provisions under the new law, right? Next, restructuring and reorganization. So, since we mentioned this earlier also, that for the provisions of non-profit organizations, things were scattered here and there in the old act. Now they have been consolidated at one place. So let me just read it from here. Provisions related to NPOs previously scattered across multiple chapters have been consolidated into Part B of Chapter 17, titled as Special Provisions for registered non-profit organizations, consisting of 7 subparts. Also, terminology like approval used in sections 1023C and 80G. If you remember, whatever donations you were making to these trust or non-profit organizations, that if they had qualified, if they had taken that ATG approval from the government, if they had taken this 12A, 12B certificates, you will be getting that ATG deduction benefit if you had donated somewhere. So that kind of thing was there in Income Tax Act 1961. There, the terms were different, and now in the new act, it has been defined differently. Umbrella term for NPOs. So whether it is trust or any other organization, hospital, education system or education institution or anything, all those have been now considered as registered non-profit organization. So rather than using different terminologies, they are now using one term for all of these institutes which are running for non-profit motive. Okay. So whether it is trust, religious trust or charitable trust, educational institution, hospital, etc., they are now uh, they will now be referred as registered non-profit organization. Next, whether there is any change in TDS and TCS provisions also, let us see that. The 1961 Act has 65 sections related to TDS and TCS. These have now become consolidated. These have now been consolidated into 13 sections only in the new Act. Section 393 in the new Act organizes TDS provisions by payee, categorize namely residents, non-residents, and any person using structured tables. So all the provisions which were there in the old act, they have now been shifted to new act, and the section which you have to remember for TDS, it will now be section 393. So earlier for salary and all, we had 192, then 194 onwards, A, B, C, D, then they were the sections there. Now we have just 2 or 3 sections in the new act, section 392, which corresponds with the TDS on salary. Section 192 is corresponding with section 392 of the new act. Then we have section 393 and 394 covers the TCS provisions. That is what it says, and a table is given to make everything more clear and understandable. So the table clearly reflects what shall be the tax rate for the residents, non-residents, and for any other person. So everything is being designed that way. Next, regarding the exemption provisions, like section 10 of the old act, it used to define what incomes will be exempt from tax, even if you are earning something, but that will be exempt. For example, agricultural income will be exempt. If you are earning HRA, so till some extent it will not be taxed or things like that, gratuity and other provisions. So section 10 of 1961 Act dealing with exemptions had become highly complex with nearly 140 clauses, 90 explanations, and 134 provisos. In the 2025 Act, exemptions related provisions have been restructured into 6 separate schedules for clarity. Relevant exemptions are now included under their respective heads. For example, salary related exemptions are part of salary provisions, and the trust related exemptions provisions are included in the NPO provisions. So rather than having it at one place, they have now been shifted to the specific section wherever it was required. So this is the major change if we talk about in the exemption part. Next, with respect to the salary provisions, just a second. Yeah, with respect to the salary provisions, all salary related provisions have been consolidated in one place. Deductions such as gratuity, leave encashment, commutation of pension, compensation on VRS, and retrenchment compensation found in section 10 earlier are now part of the salary head in the Income Tax Act for easy reference. So that again and again, you do not have to switch to other things. You can see everything at one place. So everything is being consolidated at one place in the new act to make the things easier. So it is not a complete overhaul. If we try to summarize, it is not a complete overhaul. It is not a complete change altogether. It is just, organizing the things which were, looking messy in the old act. So it is not a new income tax code. It is still in continuity in the taxation principles. So same taxation principles will continue here. There is no change in the taxability provisions. Judicially settled positions will be maintained. So if the case has already been settled in the old act, it cannot reopen in the new act as per the new provisions or something like that. So judicially, if any case has been settled already, assessments have been done, then it will not be questioned further in the new act. Next, grandfathering accrued rights and liability though. So we will discuss about the exact meaning of grandfathering, and it's better to go there first. It's better to go. Okay, what is the concept of grandfathering? In the concept of income tax, if we talk about, grandfathering is a legal provision that exempts certain existing investments, contracts, or situations from a newly introduced act. So whenever a new tax structure comes up, the old act or the previous generation, that is known as father or the grandfather, that will prevail for some time, or the benefits which have occurred from the earlier act will continue to exist in the new act also. And this is simply known as the concept of grandfathering, that the grandfather will still have some hold in the new act. Essentially, it acts as a protective shield. So it protects from various provisions. There should not be any harsh taxation on the as per the new provisions maybe. So it acts as a protective shield. Whatever protection you have got in the old act, you will continue to enjoy that in the new act as well. When the government introduces a harsher tax rule or removes a tax exemption, a grandfathering clause ensures that the people who had made any financial decision based on the old rules are not unfairly penalized. Let us just quickly take an example. Just like suppose I purchased some shares in year 2023. Okay. So as per the old act, if I hold the shares for more than 12 months, it will become my long term asset. And whenever I sell them, either if I sell them at a profit, I will have long term capital gain. Or if I sold them at a loss, then I will have long term capital loss. And the tax rate will be applicable accordingly. Suppose if in the new act the provision with respect to the categorization or the definition of this long-term asset has changed. Suppose it has become 6 months only. So it cannot change whatever the definition was there in the old act, or whatever the benefit I had acquired by purchasing those shares. I can still treat that as a long-term asset whenever I'm selling it in the new regime also, in the as per the new provisions also. Suppose I purchased them in 2023 and now I'm selling them in 2026-27, I will still keep them as a long-term asset only. The definition will not change, even though it has changed in the new act. So that is what is meant here. Whatever the provisions were there, they will be same in the new act as well, to the extent this grandfathering clause is there, to the extent that it does not unfairly penalize the people. The old rules continue to apply to those existing cases while the new rules apply to all the future transactions. So, whatever transaction you are taking place, suppose now if I purchase any share, and suppose now if there is any provision that the long term definition will be just if you hold for 6 months, it will be categorized as long term now onwards. So, that way the things will change. So, for the new from the new tax year, the things will change, but for the old years or the previous years, it will remain the same as per the old act. That is the main thing which is being explained here. Next, so what are the major changes and where it is highlighted in the act? So section 536, you should know that this is particularly related to this repeal and saving, and this is very, very important for first 2-3 years. So by the time we get accustomed or we get used to the provisions of the new act, the benefits from the old act will continue to exist for 1 or 2 years or whatever the time period may be. And as soon as the time period expires, then complete new act will take over. So that is what is mentioned here. So Income Tax Act 2025 handles the transition through Section 536. So this is, if you have any doubt about any of your previous rights you have obtained under the income tax previous law, then you can check this Section 536 and you can get the answer to your question. So it says that it ensures the old tax framework continues to apply to earlier years. It will align the terminology between the two acts. Similar kind of terms will be used. It will allow the law to be modernized without unsettling the established position. So whatever has been established in in the previous act, it will continue to remain the same. Subsection 4 provides that Section 6 of the General Clause Act will apply. This simply means that wherever there is any contradiction or confusion, the provisions of General Clause Act, which says that a clause will be interpreted in this way. So that interpretation will be used so that there is no confusion. So normally, why does government uses grandfathering? We have understood that it improves the investor confidence so that people do not get shocks that as soon as the new act changes, everything will change. The new provisions will apply from next day onwards. It is not that way. So to boost the confidence among the investors that you get accustomed, you get used to, you understand the provisions of the new act, and meanwhile the old provisions will continue to exist. It also ensures legal fairness since it upholds the principle that the law should generally apply prospectively. So for the new transactions, new law will be applicable. For the old transactions which have taken place in the earlier years, the old provisions will still be applicable. Market stability. Announcing a major act change without grandfathering would trigger massive panic driven and sell offs in the stock market. So, to maintain the share market prices, although it is fluctuating so much, so at least this income tax provision should not make it more difficult. So, that is why grandfathering provisions are there. Let us move further. So, this is just the summary which we must understand, that there is no new tax is being imposed. There is no provision of new kind of tax. The same tax which you were paying in the earlier act, the same provisions are there here also, but the section numbers have changed. Just that. So what is the crux of the change? It is only done to simplify the old act. The old act had become very bulky. The provisions were scattered here and there. The things were not clear. It was difficult to understand. So to in order to simplify, the whole thing has taken place. Existing TAN numbers will continue. You do not have to apply for a new PAN or TAN number in the new act. Old approvals, registrations, recognitions will still be valid. Suppose any trust has got any approval or registration under the old act, that registration will still hold good in the new act. Old circulars, notification, instructions will still be valid. Rights, benefits, obligations, and liabilities that arose under the old act will continue to exist. Faceless schemes will continue. So if you remember, nowadays, faceless assessments are taken place. You do not have to be present in front of the department. Everything is being done online. So the same faceless schemes will continue to exist. All assessments, appeal, other proceedings for earlier years, that is before tax year 2026-27, will continue under the old act. So old provisions will continue as per the old act. For the new ones, the new act will take place, or the provisions of the new act will take place. So this is what we can understand. For how long will the old and new acts run parallelly? So it is, I mean, from the whole session, you should have identified that though we have a new act, we will still see the provisions of old act also in place. So it is very difficult now for the professionals because they have to be thorough with the old act as well as the new act. So now two income tax acts we have to remember. So now the question arises, for how long this will continue. Normally, everything which is mentioned in new income tax act, it has a reference to the old income tax act. So practically speaking, it will continue uh, for long period. But as per the answers given by the income tax department, they are saying that effective from 1st April 2026, the 1961 Act will be repealed. However, its provision will continue to govern all the tax years beginning from 1st April 2026 accordingly. The Income Tax Department's e-filing portal will facilitate compliance under both the new and old acts simultaneously. So while filing the returns, those of you who are filing the returns on their own using the income tax portal, both the returns can be filed simultaneously, whether it is pertaining to the old act or pertaining to the new act. So for the old act, you are filing your income tax returns. For the new act, you are filing your TDS returns. So both the things are taking place together on the same portal. Taxpayers filing returns for assessment year 26-27, which is pertaining to the old act, they will be filing it in July, August, September, whenever their due dates are. And for this year 26-27, we will file for this tax year 26-27, we'll be filing the returns in the next year as per the new Income Tax Act, right? All the assessments, appeals, and other proceedings related to earlier years will continue to be conducted under the old act until their final resolutions. So, if any case is still pending, the case has not been resolved, it is still under the assessment or any income tax tribunal or any income tax authority, that will continue to be processed by or under the old provisions of the act. So, that is what is discussed here. Okay, let us see this. This is a chatbot which is designed by Income Tax Department. Since there is a change in the law, they want you to be well equipped with the new act. So, Kar Sathi is the new chatbot, AI chatbot, which is introduced by the Income Tax Department. Let me just read it for you. Kar Sathi, or basically Kar means the tax. So, for tax, they have given you a Sathi, that means a friend. So, for any kind of tax queries, you can contact your friend. It is an AI chatbot which is ready to answer any of your doubts uh, online. So let us just quickly see this, how it works. And with this, we will finally end the topic here only. So let me just stop sharing the screen and I will share the Discuss Sathi chatbot app. So whenever you have any doubt, you can directly go to the income tax portal and you can chat with this. So if you can see my screen, are you all able to see my screen?
Yes, ma'am.
Yeah. So it is incometaxindia.gov.in. This is the name of the site. If you see here, incometaxindia.gov.in. On the homepage itself, you see this Kar Sathi here. Can you all see this? This is the Kar Sathi. This is the chatbot, and here you can ask your query. Whatever query you have, you can ask it here. So suppose I asked it. Uh, I mentioned that I had a query. I have a query, I mentioned it here. So it is asking me, tell me how I can help you. So I mentioned that I am a salaried person with 15 lakh per annum. I hope my screen is visible. I am a salaried person with 15 lakh per annum. That is my salary structure, I have told him. What is the change for me in the new Income Tax Act? I asked this question to this chatbot. So for this question, it has given me a detailed reply. So it has answered, for a salaried person earning 15 lakh per annum, the key change under the new Income Tax Act is default new tax regime. You have to select the new tax regime. And this is the tax structure which it has provided me. And then again, it is interpreting the things for me, that at 15 lakh income, you will fall under this category, 12 lakh to 16 lakh. So I'll fall under this category because 15 lakh is under this category. So how my income will be taxed, it is even telling me that. So if the income is above 12 lakh, it is taxed at 15%. The new regime is default regime unless you opt otherwise. Under this regime, total income is computed without certain exemptions and deductions specified in section 202, subsection 2. So again, they are telling you what is meant by that. So if you want, see here it is even writing, if you want, I can also give you a simple comparison of old regime and new regime for this salary. So if you want, you can go further and you can keep on asking the things. Then again, it has given a disclaimer that if you want further consultation, better to go to any professional person who can guide you simultaneously. So if you guys have any question, I mean, all the participants, it's open forum for you now. If you have some query, we can ask it here. We can simply ask the chatbot whatever your query is. If anyone would like to ask anything, we can write it here. If you have any doubts, just let me know. Otherwise, we can end the session. So Sanjay ji is saying an Income Tax Act has provision to give gratuity in every month's salary. So you want me to check this here? Normally, what is the case? Gratuity provisions are governed by Gratuity Act, right? So in every month salary, obviously they will deduct some amount as per the provisions of the Gratuity Act, but the amount is given or it is paid when you leave the job. When you leave the job. And recently, the labor codes have also changed. Earlier, it was that if you continue in one establishment for 5 years, then only you are eligible for the gratuity. But now it is saying that even if you continue for 1 year, you are eligible for gratuity. And the deduction and all the computation and all, it is the same. There is no change as per the new act. So that is the main thing. I mean, is that what you wanted to ask, or you want to ask anything else? So let me ask here if you want to say, you have to mention I have a query. So again, it is saying, tell me what your query is. So I'm just writing it here. Hope my screen is visible.
Yes, ma'am, it's visible.
Yeah, so I'm just writing, is there any change? Is there any change with respect to gratuity provisions as per the new IT Act 2025? So this has given you the complete detail, whatever the change is. So it is still taxable, subject to some specific exemptions. It is saying these are the key points. It has given you the section reference also, how the calculation shall be done for government employees, for non-government employees, and all that. Okay. Is there any other question? You can even check your tax liability on this. You can ask anything related to new act if you want to. Suppose your some litigation is going on in your case as per the old act. What will be the settlement as per the new act? Whether the new act will be applicable or not. Normally, it will not be because we have studied that for the existing litigations, the old act will continue. So you can, just check what are the things which may be possible as per the new act or the old act. Wherever you have any confusion, you can just use this Kar Sathi, and you can even tell others also to take benefit of this Kar Sathi. So because this is a very good initiative by the income tax department, so that your queries will be solved. You do not have to go to your chartered accountants and other professional people for each and everything. I mean, sometimes the things are very simple, but it is very, it seems that who will tell us all about that. So we, for each and every question, we try to approach the professionals. So rather than going to professional, the tax department has given this chatbot for us. So rather than, Google doing the Google search, you better do the search on this Kar Sathi. It will give you the exact or the most appropriate answer.
Ma'am, there is one more question in the chat box.
Are there any change in the ITR for financial year? So if you want, I can just put it into that. So normally for with respect to the income tax rates and all, there is no change. I will just share my screen again, just a second. I've put your question already and it has generated the answer also. I'll just show you here. Are there any changes in ITR for financial year? The number ITR form numbers have changed. but that will be applicable from next year onwards. If this year you are filing your income tax returns, it is still pertaining to the old act, right? So here it is saying for financial year 25-26, the main point is return year, it will be known as assessment year 26-27. Governing law will be old act only, and the old ITR forms will be used. From next year onwards, you will file with the new forms. So it is all mentioned here. Your due dates and everything is mentioned. Whatever you want, I mean, you can keep on asking and it will give you the answers. Okay. Can we conclude?
Yes. Once again, now I request all the delegates to unmute yourselves and ask questions if you have. You may also type your questions in the chat box. We'll wait for 2 minutes, ma'am, and then we'll go.
Sure, no problem. No problem. So normally, whenever the new act comes into picture, people are very, confused how this will all be implemented. And so for that reason, Income Tax Department has come up with these solutions, and they will also be organizing some outreach programs. So if possible, you can even attend those. And if you have any Income Tax Department nearby, brochures are available for you to understand. So you can easily go there and collect the brochures or pamphlets to understand the changes in the new act if you want to. With respect to taxation and all, there's no change. So don't worry about it. It is still the same.
So I see there's no questions anymore, ma'am. So we are going ahead. Before that, on behalf of ICS and all the participants, I would like to express our heartfelt thanks and sincere gratitude to you for your insightful and highly informative presentation on the new Income Tax Act 2025 during today's Sadhguru. Your clear explanation of the key provisions, practical implications has helped all of us a better understanding of this important legislation. The way you simplified complex tax concepts and shared valuable professional insights made the session both engaging and enlightening. We are grateful for your valuable time, support, and contribution towards making the session successful. Thank you once again, and best wishes from ICS.
Thank you. Thank you so much. Thank you.
Yep. So ICS is placed to provide you all its research and development, integrated management system, QMS, CMS, and OHSMS. Excellence in education management, ISO made easy in Gujarati, Marathi, Telugu, and Hindi. Our recent publication, first one is Urja, Thermal, Oil and Gas, Nuclear, and second one is Jang Se Jang Tang, Fight with Rust, Corrosion Causes and its Mitigation. For reading any of the above books, please contact Ms. Sushma Kidalkar. Feedback form, please register on www.sadgunsam.org and go in your login and give a feedback. Before closing, I would also like to thank all our participants for their valuable time and active participation. We hope you found the session informative and useful. Have a nice day.